with Stephen Choi. I'm happy to be back here today. We are, for those of you, I've just kind of started this. For those of you who are new, what I'm doing is I am trading using this LVX trading software, which I think it's great. And I am actually trading my real Reg T account and seeing how I do, and you guys can see every day what I do daily, and then you guys can kind of witness how I use the software to trade options. So let's just check my account real quick. These are my positions. I'm up slightly today, and I'll talk about some of these things. Let me just go to my favorite one, which is ZNGA. So yesterday, what I was doing was, you know, my assumption was that ZNGA kind of went a little bit, moved up a little bit too much. So you see this Bollinger Band, it kind of went out of it, and every time it's gone out in the past, it's come down. And so I was thinking it would retrace back to around the 550 area before start going up again. So that was my premise, which is why I started doing this trade, which was I was selling the March 5.5 calls, and I bought these April 6 calls, and I was doing them for 4 cents. Let me see if I can actually bring that up. Right, so you see this, I was selling these, and I was buying the April 6. So I was doing it roughly for 4 cents and 5 cents. And if I punch it in today, so let's say I'm buying this. Actually, let's do it complex. It's 26 cents, and I'm selling this. Right, so the fair value is 12 cents. I bought it for 5, so I made 7 cents, roughly 100 sometimes. So I'm kind of liking the fact that it is kind of pinning to the 550 area. The kind of trades I did today in ZNGA is kind of to reinforce that. So I was selling the calls yesterday, and this time what I'm doing is I'm kind of doing the puts. So, you know, I'm selling these, the March 5.5, and I'm actually buying these for 1 cent credit or even. So I want to start owning some downside put just in case the stock takes a nosedive, and I'm willing to take this one-day risk with ZNGA not going below 544 and seeing and to own those options basically for free if I get away with it tomorrow. Some of the other things I was doing was I was selling these, the 5.5 calls once, and I was buying 2 of these. So I bought 20 of these, sold 1 of these for I think 3 cent credit. If I'm not, let me see. Yeah, I paid 8 and 9 cents for them, and then I sold the March 5.5 calls right here. You can see I sold them for 19.20. So I actually did it for credit, and the reason I did that was because I think there's a decent chance that ZNGA is going to start moving up again, and I was more comfortable selling these. So I know yesterday when we talked about it, now that I have all these positions, it gets a little bit tougher to kind of figure out what I have. So, you know, I have April 6 calls versus March 5.5, and I have these puts against these puts, and then you can see I have various call spreads going. But in the end, one of the things that you can do is you can pull up the risk chart, and I showed you guys this yesterday, and what you do is, and let me actually try to get rid of some of the other days. So you can see, like right now, my break even is 540 to around 573. So as long as ZNGA kind of stays within that range tomorrow, I should have another positive day in ZNGA. And I liked it because, you know, it gives me more room for error. So, you know, the stock has to move pretty much within like a 4 or 5% range for me to still break even, which is pretty good considering that I made that money going up. And I know before yesterday, if you guys were listening in, I didn't like this downside as much, so I was buying some puts to alleviate it. So as you can see, I have this little hat on right here, and that's where I'm thinking the stock's going to remain. But if I'm completely wrong, you know, I'm not out of business. So that's it in ZNGA. There's a couple of other stuff that I did. Let me actually go to RSX because I think it actually. So I sold these puts, as you remember, because of all these guys selling them. So this morning, I realized like there's more news out from the Crimean area in Ukraine that they're maybe voting to try to go into Russia. So, you know, it's not settled. So I was kind of uneasy about keeping these, the March 23s, because a lot of times these stocks, and let me put in daily. Sometimes what happens is they have this like huge sell-off and it bounces and then it retraces back. So I was kind of worried about that. So what I did was I rolled down. So I bought the 23s back and sold the 22s, and I did it for 30 cents. I did that because it looks like people were kind of maybe thinking the same thing, and you can see that people are starting to buy some puts here. Also this morning, a ton of these traded where people were buying these calls for 65 cents. So what I did was I bought these and I sold the March 25s against it so I can get it for a cheaper price. So I did this spread, and the reason I did that is, as you can see, I'm basically short the strangle, and the way I'm protecting that to the upside is these calls, the April 25 calls. And the downside, I'm not protecting as much because I feel like the downside was capped for the next couple of days, maybe down to 20, but I'll have to keep a close eye to make sure that I'm doing things correctly. But if you just look at this position itself, so let's say this is 40 cents, this is about 20 cents, you know, that's 220 bucks. This is another 640 bucks worth of decay and premium. And there is, you know, like 9 days to go. I mean, little over 2 weeks to go. So I kind of like that position. Because every day that goes by and RSX does not move drastically, I'm going to collect that premium each and every day. So that's what I'm doing in RSX. I know yesterday also GM. We were talking about, and this only came about more because I have a Reg T account. So you see these March 35s, looking at the LVX, I can see that there's 30-cent dividend, but I can't exercise these. So if I was a professional and the margin was not an issue, I can just exercise them, pay, and basically collect my dividend and then buy these puts, right? So basically I'll buy stock, I'll turn these calls into stock, I'll buy these puts for 13, 14 cents, and then I'll collect 30 cents in dividend, which is a good do. So I'll make 17 cents if I did that. But since I couldn't do that because of my Reg T limitations, I wasn't that keen on it. So what I did was I sold this call spread that I put on this morning for 175. I bought it for 120. So I made about 550 bucks. And my general thinking when I was looking at the stats is there's still tremendous amount of buying on the call side. So you know, when I was looking at it, 23,000, and a lot of the calls are being bought on the offer. So I was tempted to kind of try to roll it up. So what I mean by that, and let me just punch it up right here. You see how GM is kind of like right at this end of the Bollinger Band. So it's kind of getting stretched, which is why I think it's not moving out of the range too much. You see how in the past, every time it's gone out of the range, it's pulled back a little. And but if I change this into a weekly, you can see this big move. And I guess what I'm hoping is that it'll actually move higher to around the 40, 41 range in the next couple of weeks, and then these 29 calls that I basically got for free now, right? So I put this 35, 37 call spread on, and I paid $1,000 or $1,200, and I made $500. So I made like 33% in a few days, and then I'm rolling it into a higher strike. So I'm trying to buy these, but the 24 cents seemed kind of high. So what I did was I sold these against it. Let me actually click on the position. You see these March 07 38.5 calls. So that's about 70 cents away, which is, I mean, I don't know. It's pretty much like probably like more than a 2% move, 1 day to go. So I'm willing to sell these to own these for 20. So if you can kind of see the theme of the way I like to trade is I love owning options, but I hate paying for them. And to me, that's the biggest negative of trading options, is that you make the most money when you're naked options and the stock runs your way, but often you have to be right on direction and timing, which is very difficult to do. That's just mathematically, if everything was 50-50, you have 25% chance that whatever strategy you pick by buying naked calls or puts will work out, which, you know, unless you're some gifted person at picking stocks, it's a tough way to make money. I know there are a bunch of guys who do that, but I think it's difficult. I personally am not one of those guys. In fact, when I took my own statistics back in the day when I was a professional, I was actually correct only 51% of the time. So basically what I had to do was design a system and design my position in a way that I gave myself a best chance. So let's say GM does not move from this point on, right? Basically these will decay down to 0. And I'm hoping that these do not decay by more than 4 cents, because I paid 19 to 20 cents on the spread. So if that happens, then I got this calls for cheaper. Now, if it looks like that GM is going to weaken the following week, so you see how like a lot of times in GM it'll have one up weekday, down weekday, up weekday, down week, up, down, up, down, up, down, up, down, even though it's been going up. So you see up 1 week, down 1 week, up 1 week, down 1 week, up 1 week, down 1 week. What I'm kind of hoping for is that it doesn't have that and it has one of these days where it's like up and then up. So that's what I'm hoping for. But just in case it doesn't happen, I'll keep an eye on Monday. And if it looks weak, what I'll do is and the order flow is kind of dictating that maybe people aren't that keen on this GM going too much higher, I might sell some of these, right? So if I paid, let's say total, let's say I get away with this whole amount, and let's say I paid $500, all I have to do is sell like 5 of these to offset the 25 I bought here to make it cost neutral. So it's a really, what am I doing? Well, I'm kind of basing my idea on how much money I'm investing and how much margin it's taking and how much return it's making depending on the time period. So like if you look at the March 37 calls, let's say the GM goes down on Monday and I'm only able to sell this for $1. Once I'm comfortable that GM is not going to run up and it's going to have one of those down weeks, I'll sell this, or maybe I'll sell these, right? or maybe even these, the March 38s, to basically offset it. So if I look at it, like, yeah, there's tons of selling on this right now, latest. It's another thing that's awesome is when you put on some kind of trade on Livevol X, it's crazy that people actually don't have historically what the prices of the last trades were. Here you can see right away people have been selling. So if you wanted to buy, you probably put it on the bid more versus the ask. But in a nutshell, what I'm doing is I'm rolling it up. So I took my 550 off the table. I put $50 in my pocket. I put $500 and did this call spread. And if this thing, if tomorrow, if GM doesn't go higher than 38.50, these will expire worthless, and I have these calls that I now pay 20 cents, and I can do a lot with it because, as you guys know, I love having free bullets, and this is a lot of bullet, and then I can start selling. The thing that I think the viewers should be aware of, see how I started. I started off with a 10 lot and $1,000, but very quickly with that 10 lot and making 550 bucks, I was able to roll it into a 25 lot option. And that's something that's awesome when you're trading options. You can leverage it up and you can make money very quickly if you're correct. So, for example, let's say I get super lucky and GM does go to $41 next week, right? So that's, or $40, let's say. Basically, I would quadruple or make 500% on my investment from these calls that I did. So it's pretty exciting. I'm just rolling it up, see how it goes, but I will have to keep a close eye. So for those of you guys who are, maybe thinking of like, how do I actually roll the account, or how do I actually trade? Well, maybe you should only trade with the money you make on some of these issues if you want to double up. That way, even if let's say like tomorrow something bad happens and these all go to zero, I still would be just even versus like having a big loss, and I can start on my next trading. Generally, I'm like I said, I was generally bullish on GM just because of the fact that they had a change, and looks like some of the reports that they're getting, especially from China, is reinforcing some of the beliefs I have. So I'm still like kind of medium term bullish on GM, and we'll see what happens with that. All right, so Apple. I want to talk to you guys about Apple because I did this. I am, and I want to phrase this carefully, I am bullish on Apple stock. I guess I have never been that bullish on Apple ever since Steve Jobs passed away, just because Apple was always inventing new categories, and they would dominate that category. Now I haven't, maybe they'll do it again. They got something working, but right now I don't see it. And for what it looks like, the way the stock is going to appreciate is by them doing financial things to their own company. What do I mean by that? Basically, I totally agree with Carl Icahn that if they spend $150 billion buying their stock back, by the virtue of the fact that they're eliminating all the stock shares and the float, that the company's value should be much higher, even if their PE ratio, even if they don't earn a single penny more. So as long as they're not going down, they should do fine. So I did this spread. I don't know, I'll do a quick recap for you guys. So Apple had, Carl Icahn was buying the stock around here. They had their earnings. They got hammered. And basically, Apple came out a few days later saying that they were buying stock down at the 500 to 510 area. And not only them, but a bunch of other hedge funds were buying it. So when it got up to like 530, right around here, is when I put the trade on, thinking that, okay, the bottom is around 500, and I think the stock is going to be higher than 530 or higher by April expiration. So I bought the call spread for like $11 or something, and hoping that by this time, even if it stays the same, I should make 45% return on my money within 2 months. So that's my premise. That's why I did the trade. I was actually trying to put on more call spreads while this was going down, but I could never get a good fill. So I'm just gonna, I missed it, but just to kind of give you guys an illustration, the thing that's interesting is this stock price right now, 531.27, is probably almost the exact time when I put on the original spread. So this is what's good about if you do design your trades correctly, which is you kind of want to sell premium while you have a directional bias, right? So let me actually pull up this complex order book ticket, and I'm going to actually punch in the same trade that I got filled on. So like I got filled on like was it like 11 or 11.50? I don't remember exactly, but I think I got filled on 11.50. So after like a couple of weeks or maybe a week, what happened is even though the stock came back down to the same exact price I did it originally, looks like I'm up $1, right? So out of the, let's say I was going to make $9 total, and I'm already up $1. So with the stock not moving, I made basically 9% return on my money without Apple, without having to worry about Apple having to go up. So if you design, I like these kind of call spreads where you're selling the premium. So the fatter premium is the one you want to sell. And of course, and I wish I kind of showed you guys this before, but I wasn't in the office, is while this stock was getting hammered or was going down right here, basically that spread did not change too much. So because the vol was increasing, so the spread value was actually being maintained, and my thinking was it probably wouldn't have deteriorated until the Apple got down to around 5.10 or something, and what I was, I was kind of hoping that it was going to go down so I can scoop up some more calls, but it basically never happened. But my general sense is Apple's going to go up, and not because they're going to invent new, fantastic software or new category. I just feel like mathematically it's on their side if they do decide to use the cash that they have at their hand towards shrinking the float, and if they do, probably the stock going up to 700 is not an impossibility, because mathematically they would still be trading at the same PE ratio. That being set aside, so I'm still looking for little opportunities to get back in. You can see today, so I keep track of these kind of trades. Like I just see every day, I just kind of look at every trade I have on, I look at the stats tab just to see what's going on, right? So you can see the calls outpacing the puts, but generally people are selling premium and they're leaning short, which is the case. So it's probably not the ideal time because it seems like there's a lot of other stocks you can get into to trade that's much better than Apple. So for now, I'm gonna just keep an eye on it, but in the end, I do want to get into it more aggressively, but I just don't think it's the right time right now. But I'll let the volatility and the order flow information dictate when I'll go in. So, for example, it won't be me who decides to go in. I'll just keep track of somebody who decides to put on, let's say somebody decides to put on like a $10 million bet. As soon as that guy puts on the bet, and the market also is reinforcing that, and the charts and everything else fundamental, I'll start actually thinking about putting on same position. So I'll be piggybacking that person's position, and my basic assumption on that whole thing is that the person who puts in the 10 million or whichever bank, they probably have much more resources than I do as an individual trader, so I will be relying on them to do so. Now, are they going to be right all the time? No, but Those are some of the things where I think you can really increase your chances by looking at these order flows and then trying to piggyback, provided you also have the same opinion, obviously. If you have a completely separate opinion, then I wouldn't piggyback it at all. Okay, next stop, charter. So I did this, I sold this put spread for $3.25, and then I bought this for $2. I'm kind of regretting buying these for $2 because it was kind of, I don't know, there was nothing really to back. There was nothing reason to buy it for $2 except my own opinion. So there was no like, you know, there's no order flow or anything that kind of reinforced it. I just kind of thought it would get there, and it's not working out. I did sell this, and right now it looks like I had a pretty good return, but I'm not entirely comfortable with this $15 spread. So if you can see, like, I'm kind of punch it in there. So there's only 2 weeks to go, and you can see that it had this run up, and now it could kind of maybe go back down to the 22 range or 20 range, but I want to make sure that I'm capped around 20. I don't want to lose it down to like 105 just in case something bad happens. So what I started doing was I was using some of this money that I made, and I would like to do this spread. So I would like to buy the March 120s and sell these. So I think I have one of these working right now. So yeah, so the fair value is 52. I put in a 50-cent bid, but I would like to buy this spread, right? So let's see if I can actually get it executed. So I'm gonna let's bump it up a nickel. So I'm gonna modify my trade, and I'm gonna send it out. Okay, still no fill. Probably because I'm gonna look at the stats tab. They did 56 contracts total for the day. I think in the future, I'm probably gonna not trade this as much because it just doesn't help you when there's no liquidity. But that being set aside, I'm gonna try to work it. So for those of you guys who are watching me, I'm gonna try to limit this from $15 spread to only $5, and try to that way I can sleep better at night, knowing that my max loss per contract is $100. And if I sold this for $3.25, and let's say I buy this spread for like 50, basically my maximum I can make is $275, and then my max I can lose is $220. And right now I'll take that bet, right? With the stock trading 126.30, with 2 weeks to go, my max loss $225, my max gain $275. I'll take that bet, but I'm not willing to take a bet where my max loss could be, you know, $1,000 more per contract. Okay, so next one, EEM. So and you know, sometimes I'm not going to cover everything just because there's too many positions, and I wish I had more money because there's probably like 10 other positions I'd like to get into, but I just don't have the capital to do so. So if you guys remember, I was talking about Karen the Super Trader. I watched some of the videos, and then I try to kind of do this on EEM. And it hasn't kind of worked out because the puts worked out, but these calls haven't worked out, and now they're 50 for delta, right? They're actually in the money. I should have probably done the 10 delta options instead of the 30. So, you know, lesson learned. I kind of generally like the idea, so I want to do more. But usually when I learn anything, I usually stumble first and have to learn it the hard way, which is why I think it makes sense for me to do it smaller, just in case I mess up. My thinking is, why am I not, now normally maybe what I should do is buy this and then roll it up to another strike, or maybe roll it into another week, is what I might be thinking, or maybe even sell more calls. But since this is kind of a losing trade, I don't feel like doubling up. So when I'm losing, I don't feel as comfortable doubling up. When I'm winning, I'm more comfortable doubling up. So just for you guys in the future, that's kind of how I like to operate. And when I've had bad streaks or went on tilt. You know, poker players go on tilt. I have also gone on tilt. It's usually when I'm losing and I want to double up because I'm so sure that I'm correct. A lot of times that has come to bite me. But you can see right here, you see how everyone is like buying these calls. In the morning they were selling, but right now they're buying. So I'm still, believe it or not, I'm still comfortable shorting this right here only because I was looking at the, this morning there's two factors. So one, you see if I look at this daily, it kind of is at the upper range of the Bollinger Band. So maybe I'll follow the Bollinger Band, but you know, for now, maybe the upside is capped for the day. And also, it actually hit the 50-day moving average right here, around 40.28. So I'm hoping maybe, you know, it might take a break or maybe it might retrace. I don't want to make any knee-jerk reaction. That's not going to help me. So I'm going to think about it a little bit more because I'm not sure what to do next. If you guys have any ideas there, feel free to go to Livevol community and let me know. But I'm going to leave it now here. I did, in the interview, she was selling to the strength. So technically, I should actually be selling calls, but I just don't feel comfortable doing it. Another reason why I was okay was this morning, people were basically selling those calls. So let me actually go to the options again. So you see these March 40 calls. This morning when I came in, you see these 10,000 contracts that are sold. Some might have been done with a stock, so maybe it was a buy right. But even if you did a buy right, you wouldn't do it if you thought it was going to just rip right through $40, right? You would actually be selling the calls on a buy right that you thought the stock was going to rest on. So the fact that they sold 10,000 of these kind of made me less. If they bought 10,000, I would have probably rolled out. Since they didn't, I was willing to keep it. So this order flow information is crucial into making decisions. And if I had rolled it out at like 57 cents, you know, because they bought it, there was some good reasoning behind it, and now I have a good reason why I didn't do it. This is it'll be left to see how we do in the future. But I am interested of coupling her idea of selling like these way out of the money options to get some premium harvesting. But I would also like to combine that with volatility and with the order flow information, so I have like a couple of extra variables that can maybe help me make my decisions, and maybe I can do it more aggressively. So one of the things that she was doing was like 10 delta on the 5 delta on the puts or something, or 5 delta on the puts and 10 delta on the calls. So her wings were way out there, and I think the way she made money was she traded quite often in and out, and also she's on PM, so she can pretty much max out her account using the PM. It's really not doable with the Reg T account, so you almost have to do less, but maybe do it more aggressively. But I'm not sure exactly how to do it, so I'm developing it, so you guys can actually see me develop it as well. One of the things I did do yesterday, and I did it after I had talked to you guys. So originally I had these March 1626 call spread, but as you can see, I have nothing there now. I sold those for 60, and I rolled them into the April 1626 call spread, and as you can see, I doubled up. So I think I did it. Let me actually see what I did it for. Okay, so March. Yeah, so I sold those spreads for 65. So I paid 70, I sold them for 65. So I had like, you know, a couple of weeks worth of protection, and I lost a nickel on that trade. And then I did this spread where I sold the 26 calls, and I bought the where is it? Where is it? Yeah, April 16 calls for 150. So basically, I paid like 112.5 for this spread, and I did it because people keep rolling and they keep buying more and more call spreads. Now, this is interesting. For the first time in a while, the puts are almost as equal to the calls. So you can see how there's some put buying, there's more calls trading. So it seems like people are lightening up on the whole notion of buying calls on the VIX, which which remains to be seen how that turns out. So I have these. I paid basically $1 and change, and I have a chance to make $10 total. So why do I have this on? So I have a 20 lot here. So by paying like $1 and change, I invested probably like $2,200, and my max is 20,000. So I can make $18,000 if just things went crazy anywhere in the world that made the volatility go up, most likely, which means the market will go down, and it'll be my hedge against all this portfolio I have. If you looked at almost all the trades I have, I'm pretty bullish, right? So I have calls, I'm selling put spreads, I'm doing call spreads, but it's mostly leaning towards the long side. You can see my dollar delta is 131,000. So I want to protect myself against it just in case something crazy happens. I just don't want to lose every premium that I have on the call spread. So I have the spread on the VIX. Now, one other things I talked to you guys about this data. See how this data is $475? I'm just going to talk in theory here. So in theory, this is saying I'm going to collect $475 a day provided nothing happens to the market. Like, provided every one of my stocks stays exactly where it's at, I'm going to make $475. That is something that I would like to do consistently going forward, and I was doing as a professional market maker. I always try to be theta neutral or theta positive. I realize it's a lot tougher thing to do on a Reg T account, but I'm trying to do that now. So you see most of it, almost bulk of it, is in ZNGA, and I did it because I felt comfortable, right? So the only risk I have in ZNGA is they have been a bunch of times where they tend to announce stuff on Friday of expiration. So by no means is this safe, but I'm gonna roll the dice and say for this week, I don't think they're gonna make a huge announcement, and because of this open interest. Now, people always talk about this open interest and how the stock is gonna gravitate towards open interest. I agree, yes, that does happen only if there is no other event. So if it's like absolutely nothing else driving the stock, then the open interest is a valid way of pinpointing where the stock's going to end up at expiration. But if there is any news, that goes out the window. So people who like look at the open interest and consistently bet on the open interest, just using the open interest, in my opinion, is not that great of a strategy. It is. Yeah, I think it just should be part of the strategy. So for those of you guys who don't understand why a stock should gravitate towards the open interest, here's how. Let's say, as a market maker, I own this call and own this put, or some kind of straddle. Basically, as ZNGA falls below 550, I get short delta, and as it gets higher, I get long delta, which means that I get to sell stock when it goes beyond 550, and I get to buy stock when it gets below 450. Now, if it's far away from expiration, I'm willing to wait a little bit longer to sell my stock. But as it gets closer and closer to expiration, and as the gamma explode and your deltas explode, basically you're gonna scalp a lot more stocks. So let's say I owned 100 of these calls, right? Well, 100 of these calls, these are 50 delta, right? So I should technically sell 5,000 shares. So as soon as I sell 5,000 shares, I'll be delta neutral. So for those of you guys who are not following me, don't sweat it. But those of you guys who can follow me, who've maybe read a Natenberg and know about scalping options delta neutral, this is what I do, right? So if I own this, I don't want this to just decay down to 0. You see how this is like 11, 12 cents, but the intrinsic value is only 5. So I'm going to lose 7 cents unless I'm able to scalp 7 cents from this stock. So what I'll do is I'll sell stock at 555, and when the stock falls back down to like 545, I'll buy the stock back. And I'll just keep doing that, and it'll get narrower and narrower as we get closer to expiration, to the point where I was scalping stock if it's a penny up, penny down. So like very close to expiration, like few hours before, I might sell stock at 551 and buy the stock back at 549 to pay for my decay. And so that's why the open interest is one of the factors that would actually make the stock gravitate towards that at expiration, because there are huge number of market makers scalping stock, and the order flow, if the stock goes higher, will be that people get long delta, so they're going to sell stock. So I'm going to sell stock. Other market makers are going to sell stock, which is going to drive there's more sellers than buyers. It's going to drive it down. When it falls below 550, there's going to be more buyers than sellers, so it's going to drive the stock up. Now, like I said, it's a good way of doing it if it's quiet. As soon as like one news hits, like let's say ZNGA announces that they made another deal, you can throw all those open interest stuff out the window, because it doesn't matter, right? Because I'm not going to be, even if I was long 100 of these calls and some news came out, I'm not going to be selling stock at 555. I'm probably going to ride it long if some good news came out. I'll probably ride it short if some bad news came out. So so there will be no reason for people to scalp, which in turn will let the stock kind of go to where it should go. So that's a quick lesson. Maybe for some of you guys that was good. For other you guys it was kind of boring. Maybe you just want to see what I'm doing. But you see how I made $1,900 here on this shorting these calls, and then I bought these against it, right? And I lost 900. So I lost 900. I made 1,800. So if I just did that spread, I would have made $900 today. But I didn't. And the reason I didn't was because, you know, I'm leaning long. I'm leaning long. So I still made some money, but I didn't make quite a bit. And I sold some more because, like I said, I made money. I feel more comfortable because I'm winning, which makes me want to put it on more versus when I'm losing. So that said, my ideal situation would be that it just gets pinned at 550. What I would do at that point would be buying both of these back for a penny or so, or 2 or 3 cents, just to make sure that I don't have any exercise risk going into Monday. So that's about it. One of the things, I think I just covered it, but just to reiterate on ZNGA, is the fact that I'm doing this because my thinking is I should break even, like I should make money 575 down to 537 in ZNGA by tomorrow if nothing happens. So it's a good do. Total, let me actually relook at it. Yeah, so I can make possibly $800 if nothing changes. Just if ZNGA doesn't do anything, I'm gonna make 800 according to the risk chart, and that comes from purely from this data, right? So this looks like there's about 9 cents, 7 cents worth of decay. I have 135 contracts. That's like almost $1,000, right? So I have over $1,000 decay here that I'm gonna collect come Friday expiration, and all I have to do is make sure or hope that the stock doesn't move greater than a certain amount. So I hope you guys enjoyed the blog. People were telling me to try to keep it short, but I just have a lot of positions. Just so you guys know, I could probably talk about 10 other positions I'm thinking of putting trades on. I just don't have the capital. So I'll have to see. Hopefully, like, I'll trade better. So I started out on February 3rd. So I'm going to give you guys a quick recap. So you see how I've been up and down, and it's because I was kind of learning trading Reg T, and I didn't understand. But this is when I started broadcasting, right here, February 3rd. And then this is where now. So if you look at my 3 months, I'm actually lost money. But if you look at my max, since I had this account open, I'm up like 22,000, like year and a half or something. But that being aside, I think what I'm trying to do is more like just going forward how I will do, right? So in the last 6 months, looks like I made about $16,000. But really, I start really broadcasting the blog on this date, February 3rd, so I'll keep track. So at that point, I was up 9. Looks like I'm up 16.6. So I made 7,600, looks like, since I started broadcasting. Hopefully, I'll keep doing better because I'm learning more. As you guys know, I was a professional trader and had unlimited margins, and I did all kinds of stuff to put on the position, but I realized I have to learn a brand new way of trading. The concepts are the same, but just the margin is different. So I'm looking at the margin, how much margin it's taking up, what I'm investing, and what I'm returning, and the better I get at that, the better I'll be at picking the right kind of position to trade, because I would be taking into account all the factors I just mentioned. So I'll hope to see you guys tomorrow, and talk to you guys then. Good trading. Take care.